Welcome, everybody, to the lending report for October 4th, 2024. Thanks for joining me. Sorry I missed you last week. Just it wasn't a lot to report to begin with. Much more exciting week this week. Mortgage applications, we'll start there. Did show purchases were up 1% in terms of activity. Refinances down 3%. But I will tell you, year over year, refinance activity is off the charts. A lot of activity there. Initial jobless claims, those filing for unemployment for the first time, up 6,000 and continuing down 1,000. Now, all the news this week was about the jobs reports, and we'll start with ADP. Showing that in terms of job creations for September, did beat expectations of 128,000, came in at 143,000. And the August report was revised up a bit. Within this report, we are seeing that leisure and hospitality led the way with 34,000 job creations for ADP. But we are showing a little less activity for those people within the stayers and the job switchers. Those people looking for new employment seem seemingly more content to stay with where they're at, not so confident with where the economy is at this point. I think the people as a whole, if you talk to people as a collective, a little bit nervous, not seeing that translated in the numbers that we see coming out, though. So the reaction based on the upper echelon, not the same as those of us working here in the field. BLS came out today. This was the biggest head scratcher, really, of them all, and the biggest mover of the week, of course, as it relates to MBS markets. Did show that beat expectations by pretty much 105,000 creations, coming at 254,000 versus the estimates of 140,000. And the past 2 months were revised up by 72,000. So whereas we've been seeing the numbers revised down, first time in a while that we've seen it go up. Birth death model, this is the creation of new positions, new companies versus those that have failed and closed down, showing more failure, those closing down at 128,000. Hate to use the word failure, sorry. Just didn't really survive this market at this point. ADP showing 8,000. So always that big difference between the two, though, but at least both showing the same, that there were more losses than creations. Within the BLS report, leisure and hospitality also driving this report is 78,000 units. Now, if we go deeper into this report, we go to the household survey. This is where we get the unemployment number. Did show that job creations were at 430,000. Now, this report comes from actual calls being made to 60,000 households, quite different than how the business survey is created. But within this report, showing that 231,000 job creations were for people in the age group of 16 to 19 years old. And I find this interesting because kids have gone back to school now, and these are your high school students here that we're talking about. I just don't understand why we're seeing so much, almost 50% of the creations coming from students. And you can see unemployment did tick down from 4.2% to 4.1% because of the BLS numbers that we're getting today. So if we go into a deeper dive into this report, and why I point out the age group of 16 to 19 years old, you can see the full-time numbers, those went up 414,000, while part-time went down 95,000. And when you're thinking age group 16 to 19 years old, you're not thinking full-time employment, you're thinking part-time employment, especially if they're in school. So again, big head scratcher. And also did show that our average hourly earnings ticked up just a hair, but the average hours worked ticked down. So the suggestion here is that people get pay raises, and we're just not hearing that, because that's not what I'm seeing in the market at this point. So just interesting to note. So now let's go into the to the MBS markets. This is the 10-year Treasury, and you can see that definitely moving in the wrong direction. We want to see this chart moving down and in the red, and over the past week, it's definitely going up. Today specifically because of the BLS report. It'll be interesting to see what we see at the end of the week as we move further into the month. We will have the Fed's meeting again. We should hear another announcement on short-term interest rates. And remember, short-term interest rate cuts are not directly tied to long-term interest rate cuts. There's usually a correlation, but not when the Feds drop 50 basis points, we don't see long-term interest rates drop 50 basis points. So this is helping you in your equity line payments. If you're getting a car loan, student loans that are on variable payments, and your credit card payments, this will help in those minimum required payments. It should see those numbers start coming down. So if you do another 50 basis points, should help you even more, but we won't know that till the end of the month. So that's where we're at right now. Thank you for joining me. I appreciate you watching. If you have any questions, please do reach out to me directly. My contact information is on the page. I do appreciate when you like my videos. Otherwise, I hope you have a great weekend, and I'll see you next week.